Good morning, everybody. Mark, how are you today, buddy?
Hey, I'm good. How are you?
Excellent, excellent, excellent.
I think I'm doing a little bit better than Sam Bankman-Fraud is doing.
You know what, though? Sam had a plan, and his parents were setting him up the whole way. Those people need to go to prison right along with him.
I totally, bro. And they're attorneys.
Yeah,
Boy, I would love to watch this. All right,
yeah,
so this
man.
is just jury selection. Boy, I would love to be on this jury, but I would just go in there and be like, this dude's guilty. So they probably wouldn't select me. Uh, let's see. 7 criminal counts, could get 100 years in prison. The son of 2 Stanford legal scholars. Just, you know, it's like you can see this. There's an old expression there, Berlin. The apple does not fall far from the tree.
Oh, absolutely.
So you get scumbag people that have scumbag children, like, say, Hunter Biden, or you have scumbag elitist liberal college professor parents that create scumbags like Scam Bankman Fraud. So just one of those things. $40 million penthouse in the Bahamas. Anyway, I would love. I've never been to jury duty, but I would love to get on. If it was like a cool trial, I would like to get on it.
I've been called twice, and because I'm a bail agent and I've dealt with the opposite side of the law, they kick me out every time. They don't call me anymore. I mean, I'm sure now that I'm retired, they will, but I haven't been called since 1997.
Yeah. Well, the fact that my brother's a cop would probably keep me off of the
You
jury.
just have to tell them that.
Yeah. All right. So let's begin today with a question. When was the last time you pulled a fire alarm by accident?
Dude, he is so done. I cannot believe that guy. And now to watch them all come out and defend him. I watched AOC yesterday talk about.
Let me guess, it's racist.
No, it wasn't racist. It was just an honest mistake. He felt trapped. The only option he did was to have to pull that. And then I watched a video with Marjorie Taylor Greene walking her camera through there from where the guy was when he pulled it around the corner to the door that's always open that goes out onto the street that every single person, and while she's standing there, 9 people walk out the door.
You know, it's like, it's not, besides the fact that it's pathetic and it just shows no dignity and no class and no respect. If the smoke alarm at the Capitol goes off, I would imagine the fire department probably gives that a pretty full response.
Yes, sir.
And what if there's like a real fire going on somewhere else, or there's like a car accident, and it's like this guy is trying to do this and he's supposed to be an educated guy. He's a principal. It just shows you, man, these days it's like what passes for an intellectual is the bar is pretty darn low, dude.
Well, it's just the sadness of the grandstanding done by and I don't want to say it's the whole entire Democrat Party, because I know really smart, intelligent Democrats that really care about this country. But this younger group, like AOC and her little squad of goons, those people don't care about this country. And they're doing whatever they can to disrupt everything.
They come from these third world countries, and then because there's so much opportunity and things are so great here, and then they try to turn this country into what they came from.
Absolutely. When they left there because it was so bad.
Yeah, it's whatever. I guess you just can't let it go to you. All right.
Anyways, Philadelphia's falling apart
now. Sometimes the market is kind of easy to follow, and sometimes it's not. But I would say right now is probably one of the easy times. When I say, I shouldn't say to follow. I should say to kind of get an idea or a sense to where it's going, because in a lot of ways, Apple is the most important stock, right? It's the biggest market cap. Apple's and Microsoft dominate the tech sector. So if we go over here and we look at the breakdown of the S&P 500, we can see Apple is 7%. So this is 500 stocks, but Apple is 7% of it. And Microsoft is 13%. So these two roughly together are just say 14%. So you have 2 stocks that make up 14% of a 500 stock index. So it's important. Now, we talked a lot about this 175 level, right? It was resistance back here. Then it became support. So as long as Apple is below this 175-ish level, as a matter of fact, I think I might have changed this to 174. Yeah, so this is 174. I mean, we don't want to be that precise. We got to give us a couple dollars leeway. All right. So now, if this level that was support, see, we have here resistance turned into support. Okay. Now, if support converts into resistance, that will set the stage probably for a move lower. And as you can see, yesterday was a pretty decent up day, up 1.5%. But look at where we slammed into resistance, right at the level that was support. And then this morning, we're down pretty good. So as of this one particular day, it looks as though what was support is becoming resistance. So we just got to keep an eye on here. And as far as I'm concerned, in the equity market and excluding energy and utilities and REITs, because those are kind of a different thing. But those are all very small sectors. The rest of the market, I don't think is going to go make any kind of a meaningful move higher as long as Apple stays below 175. And this is just a really good example of how some price levels just happen to be more important than others. I mean, why is it 174, not 177 or 163? I mean, I don't know, but it's like, well, I guess partly it's because it's a psychological number. People like nice round levels. Although we're talking about 174, people probably gravitate towards 175. But anyway, you got the people who bought back here who, once the price goes lower, are just like, oh man, this sucks, and I want to get out. But I don't want to lose any money. So if it gets back up to my price level, I'm going to try to sell my shares for the same price that I bought them at. So if you have enough remorseful buyers placing sell orders, the level that was support can convert into resistance. And as we can see, that's what's happened here. So this is not something that we'll know today. We got to give it a week or two to kind of play out. But I mean, I would see no reason to be long as Apple is below this level. And I would probably be positioned to the short side. If it looks like Apple's going to break 175 and go back up, well, then you jump in. But until then, I think the path of least resistance is going lower. So let's look at some of this other stuff here too. I think it's the other thing we got to watch too is interest rates, right? It's look at our 10-year yield here. Ooh, look at that. Market.
Holy cow.
But that was another big move higher. Yeah, I mean, with interest rates going up like this, Apple's below key resistance. I just don't think that we're gonna, the market's gonna move much higher. But keep in mind, if interest rates continue to move higher, there are parts of the market that will move lower. For example, if we go take a look at the utility site, I mean, I was just reading what Mr. Stevens said on site in 5 minutes. Oh, that's with the fire response. Yeah, it's just an absolute disgrace. And the fact that people are backing this guy up is really pathetic too. But look at this, right? You want to talk about a market meltdown. And as long as interest rates go up, this move lower will probably continue. Now, people generally buy utility stocks because they are looking for income. Utilities tend to have high dividends. Now, if interest rates keep going higher in the bond market, what's going to happen? Well, people are going to sell their stocks, they sell their utility stocks, and they're just going to go put their money into the bond market because they get better returns. So this could probably have a ways to go. There's always ways to play things, right? It's like you can't, if you want to be a successful trader, you can't just put your head in the sand and hope things go your way. You got to be nimble, right? Because there's always going to be an opportunity. So everyone's talking about, higher interest rates are bad for the market. Well, think of the money you could make here if you bought puts.
Absolutely.
And because you're in utilities, which are boring, so to speak, you're not going to be paying the same kind of premiums that you're paying if you're buying options in the tech sector. So let's go see if
You got a question here, Mark, about gold and silver.
If I just want to see if these guys got some kind of a inverse
From
utility
Alba.
ETF.
Good morning, Alba.
What do I think about gold and silver? Well, let me look at this first, and then we'll take a look at that. I just want to see if they have a utility ETF. These guys have a lot of leverage utilities. All right, so UTSL, that's the utilities bull. So if interest rates start to moderate and start to come lower, well, then you might want to think about buying something like this. If you're super bullish, you can buy options on this. This is going to go up about 3 times as much as the utility sector does. This is their bull 3X shares. Now let's see if they got a bear. I mean, they got a lot of different things, oil and gas. No, I guess they don't have a bearish one for utilities for whatever reason. All right, let me take a look at gold and silver first, and then we'll go through the different sectors. So gold. All right, gold futures. Oh, look at that. That's really, yeah, you know what? Here is our example, right? We talked about this the other day. That's why this red rectangle is here. We had the fast move up. We get the fast move down. Wow, this one played out like a, this makes me look like a superstar, man.
It really does. You need to do a video on this one.
I had this one right. But this shows a lot. But hey, man, once you start thinking you're right, that's when you market.
That's right. That's right.
That's when the market takes you. So
that's right.
I've been doing this long enough to know that.
That's perfect, though.
All right, so we got a couple of things going on here that can teach us some things. Okay, one is we got our descending triangle type pattern here. This is actually a pretty good one. So this shows us that we got aggressive sellers, right? And can place in buyers. The buyers are willing to hang out at the support level. This is like, let's call it 1920, right? They're willing to be patient, but your sellers are getting more aggressive. They're willing to sell at lower prices. And this shows up as these peaks form at lower prices than the prior peak. This is what we call lower highs. So the descending triangle pattern shows complacent sellers that sets this buyers for support to break. A lot of times when you get to support, and if you're curious if it's going to break, if you have these descending or these lower highs leading into it, it's a good signal it's going to break. Now, here's a really good example of our fast move higher, fast move lower. One of the reasons why we get support is because of, like here, this is a good example. See how resistance here became support here? All right. Well, this happens because there are people who sold here who thought they did the right thing when the price went lower, but when the price goes higher, they tell themselves, hey, you know, I made a mistake. I'm going to buy my gold back if I can get it for the same price I sold it at. So if you have enough remorseful sellers placing buy orders, what was resistance can turn into support. Now, when you have a move like this, where you get a fast move higher, you just rip through these levels really quickly. I mean, here we went from here to here in just 3 days. There's not going to be a lot of people that bought in, that sold in here, because you just went through the levels too quickly. So when we get up to here, when those sellers come into the market, they have a hard time finding buyers. So they have to offer their gold out at a discount. And this is why we get the fast move lower. So where would I be looking for a level here to play like a bounce? And I mean, I think it's pretty clear here, right around 1810. We had support at 1810, became resistance, then it became support, then it became support. So I don't think I would buy it here. But if it got down to around 1810, I would be looking for a trade. And you can even see here, right? See how support turns into resistance? This is because we have people who bought here who are trying to sell to get out at break even. So you get the same kind of principle here. We could see we got our fast move down, fast move up, because we just go so quickly that there's just not a lot of time for there to be a lot of people buying. So there's not going to be this large concentration of remorseful buyers in these price levels here, in between these price levels, who are trying to sell to get out. So when the buyers come in, they have a hard time finding sellers. So we can see this on pretty much any chart, right? Levels that we move through quickly one way, If we reverse and get back to those levels going the other way, the move tends to be quick. For whatever reason, this market just doesn't like, I guess it's one way you can look at it is the market just doesn't like these price levels. Now, if you are going to get bullish on gold, there's a couple different ways you can do it. You can actually buy gold if you're a futures trader, or you can call one of those places that you see on right-wing TV where they're talking about how you can buy gold for the coming apocalypse, which I always find entertaining. Or if you're really going to bounce, you can look at some of these gold miners, and I would look at this gold miner ETF because GDX is the symbol, because this will probably move more than gold does. In other words, if gold is up 2%, this will probably be up like 4%. So gold gets down to where we talked about, it looks like it's going to reverse. Instead of buying gold, you may want to get your exposure over here. All right, let's look at silver. Silver futures. Now here, let's see what we got going on here. Now this looks like it might be ready to reverse. Where are we trading this morning? 21.30. All right, so we got down to here. See, look at this, right? We haven't looked at silver, but for some reason we put this line in at some point in the past. So this line is 28. I'm going to say 28.90. And look at where today's low trade was. 20. Oh, sorry. Did I say 28? I meant 20. So 20.90. And today's low trade is 20.87. So, I mean, do you remember the last time we looked at silver? It's got to be at least a couple weeks. Well, actually,
no, it's been longer than that.
But anyway, it's like, this just shows you how important it is to know where these price levels are. I mean, you could have bottom ticked this thing this morning.
Steve's traded this thing for a couple of years now. He's made a killing off of silver.
Who has?
Steve.
Mr. Steven?
Yeah, he trades it all the time.
Yeah. Yeah, some people, it all depends on your personality. Some people prefer to just kind of have an open horizon and just trade anything. Other people have kind of a more narrow focus. Maybe they only trade biotech and there's really no strategy that's better than the other. It's just, you got to do what fits you. But if you do just concentrate on a few names and you get to know them really well, there's a lot to be said for that, because you could kind of optimize your oscillators and your indicators. So, like, in other words, if we look at a typical indicator like this relative strength momentum, this relative strength index, right? This comes with defaults, right? It measures a 14 time period horizon, and you got your thresholds at 70 and 30. Well, maybe for whatever thing that you're trading, maybe it gets oversold before it gets to 30. Maybe when it's at 35 for that particular market or whatever it is you're trading, 35 is oversold, right? Maybe it's got to be 25. It all depends. If the market's moving higher, you're going to get more overbought signals than if it's going lower or going sideways. So you may want to give yourself a little bit more flexibility. But anyway, silver kind of follows gold. And if gold gets down to that level we talked about, it's probably going to bounce, and then this will probably bounce too. So,
can you say that again, Mark, about the oversold? What you just said?
Yeah.
That's important.
So this particular indicator here, this relative strength index, the default settings are, well, if the blue line gets below the red line, it's considered oversold. If the blue line gets above the red line, it's considered overbought. But these are the default settings. So 70 and 30 are defaults. A lot of people don't realize that you can change those settings. Now, sometimes the default works good, but sometimes you're better off making some adjustments. Like here, this looks like it's pretty good, but you would have missed this move here. So maybe here, what you do is you go in and you say, all right, well, you know what? I don't think this is overbought at 70. I think when it gets to 65, it's overbought, as opposed to being at 70. So I'm not saying that that's what you should do, but I'm just being hypothetical. But now we catch these two signals, like this one here and this one here, which we wouldn't have gotten if we were just relying on the default setting of 70.
Awesome. Thank you.
Yeah, so this is what we would call like optimization. And there are firms that literally spend millions and millions of dollars on, they hire these NASA scientists, geeks, and, just throw all this like heavy at it. And suppose now they're artificial intelligence. But, it's like, I don't see proof that that is better than just eyeballing it, because a lot of these firms that are really heavy quant firms like that rely on artificial intelligence to do their investments.
Mm-hmm.
Their performance is not good. A lot of them, the performance is really bad. The best traders are the ones who have the ability to be flexible. And, I'm not really a computer programmer, but I just think the results speak for themselves. A lot of these, when the last time artificial intelligence was really like hot and popular and in the news was like maybe 5-6 years ago. I think it was 2019. And because it was so popular, there were a lot of there was a lot of funds that were a lot of investing firms, hedge funds or investment funds were able to raise money because people would say, hey, I got this great artificial intelligence strategy. If you give me money, I'll manage your money and I'll make a lot of money for you. But the performance of a lot of those firms has really been abysmal. And I just don't think I don't know, because you would think if they're doing the math and it's going backwards, they would be able to trap these things of like various human emotions.
Yeah, but Mark,
forward.
Psychology isn't quantifiable. You can't quantify people's psychology.
Well, I'm just saying that, the whole idea of AI is like pattern recognition. So if we've seen this pattern before and that's what happened, now it's happened again. So the same thing is going to happen. So somehow how you think that would be baked into their analysis, but I don't think it is. And you're right. I if there is a way to do it, they haven't figured it out yet.
Well, there's no single way to look at a pattern, and every single person sees patterns differently. It's just like Steve, for instance, when he sees that little hook on the top of where it's rolling over and it looks like a gaff, Steve's getting ready to buy puts. When he sees a little hook at the bottom that looks like it's a fishing hook, he's getting ready to buy calls. It's just the way he looks at it and the way he uses his, the fishing euphemisms to explain it. And it's just everybody has their own different way. So I don't think AI could ever do it.
Yeah. I think it's because AI looks at the market as though it's a chess game. And as we know, it's not a chess game, because what worked today may not work tomorrow. It's a game of massive amounts of personalities, right? So I like to think of it as a poker game. It's like, there's still strategies, there's still rules, but you got to factor in the emotions of the person who's on the other side of the trade. Just look at how, well, this isn't a great example, but in general, markets go down faster than they go higher. And that's because people sell because they're afraid and people buy because they're hopeful. And fear is a much more common, or I should say powerful emotion than is a much more powerful emotion than hope. So if the market really followed a random walk, it would go up at the same speed as it goes down. So the fact that we go up slower than we go down, right there in and of itself just shows you how important the emotional aspects are. So this actually looks pretty weak to me here. I would suspect we're going to get down to around here, down to around like 418. Now, the reason why I say that is, like we talked about before, a lot of times when the support converts into resistance, that's a sign that we're going to go lower, and that's what happened here. This line is at 433, and then the high trade on this day was where is it? 428.60. So, $400 security, we're within a point of it. For all intents and purposes, that's there. Now, the reason why I say that the market looks kind of weak this morning, it's down 50 basis points, which is, not huge, but sometimes a move doesn't have to be that big to be important. So let me just show you where it's trading right now. Like right here, okay? So Right now, the S&P is lower than what have been the most important prices over the past couple of days. Now it's
Right.
gone lower, like right here. This was the low trade, but the most important prices are the opens and the closes. And right now, S&P is below all the opens and closes of the last 5 days. So this was the close here. This was the close here. This was the open here, the close here, close here. So this is a technically weak move. Now, of course, it could come back during the day. But as a trader, this is one of the things that we would watch, right? If I was back on my trading desks, this is like the stuff that I would have people be watching, and I would be watching myself. If let's look at this lower. So that's 425 or 425.30. So I would say like by, I don't know, noon, maybe 1 o'clock, if we don't get back up above this level, there's probably a good chance that we get a kind of a later day sell-off. I mean, I don't think it's going to be anything like huge, but if Apple can't get above the 125 level, if interest rates keep rising, I have a hard time seeing this go up. Let's see if the bond market is open yet. TNX, or at least this index, the bond market, I guess, is probably open. Well, yeah, see, look at this.
Oh, wow.
So another jump up here. 4, now we're at 4. This thing is going to be at 5 pretty soon.
Dude, and you notice it's not stopping. It's just each morning is a better jump.
And what's kind of interesting too is, we haven't really seen the higher energy prices flow through yet to all the commodities.
Right.
But look at this, right? Here's another thing that makes me look like a superstar, all-star. But, maybe it's because I'm a warrior ninja trader.
I think, well, I wouldn't say that. I'm thinking warrior, ninja, guru, magician.
I like shaman.
Shaman's good.
Yeah, man. Because like Walker, Texas Ranger is half Cherokee. So a lot of times he goes and he meets with like the medicine man.
Well, he talks to the Dalai Lama through telepathy anyway.
He can also mentally communicate with a grizzly bear.
Really?
You ever seen that one? Bear's going to get him, and he just starts like looking into the eyes.
Well, you know what? That's a Davy Crockett thing. Davy Crockett called it smiling a bear, and he would just stare at a bear, and the bears would go the other direction.
Yeah, I guess maybe they the salami swami. All right, that sounds a little ethnic there, man.
Yeah, there's Stevie.
I was thinking about going vegetarian for a while, just for the health reasons.
Man, you got to have protein, Mark. You got to eat meat. People are supposed to eat meat.
Yeah, but
they're not supposed to just
like
eat veggies,
right? And,
yeah, I mean, you can, but I mean, if you want to do it, you got to. But make sure you stay up with getting your labs done, so you know your health risk. You don't want to change stuff too bad.
Well, I was talking to there's this restaurant I go to, which is actually friggin' phenomenal. It's not like a sit down place; it's a takeout. Lila's Falafel, and I mean, it's probably some of the best food here in town. And there's a guy that works there, and I haven't been there in a while, and the guy lost a lot of weight. And I'm like, man, you look like you lost a lot of weight. And he's like, yeah, I lost 60 pounds over the last year. And I was like, well, what did you do different? And he said he wakes up every morning and he has a glass of really hot water with lemon juice, and he's went vegetarian. And that's the only difference he made, and he's lost 60 pounds. Now, you don't know. I mean, maybe the dude went to
it's the hot water and the lemon
like
juice.
3 Whoppers at lunch every day. He doesn't
Listen,
do that
it's the hot water and the lemon juice. It's supposed to activate your metabolism and fire it off.
Really? So there's something to that, huh?
Yeah. Well, yeah. There's always stuff to the natural herbs and that kind of stuff. Man, I've known people myself that have been cured from cancer by eating roots. Serious, man. I mean, it's the natural way to do it. It's homeopathic medicine.
Yeah.
You should look into it. And also,
it's so hard to find healthy food because there's, I mean, well, we have farmers markets around here every now and then, but I don't know. It's just hard. But we got a Whole Foods. They sell pretty good stuff. We got a Trader Joe's, which sells pretty good stuff. All right, but anyway, let's go back to here. So we haven't really seen these rise in energy prices push through into the agricultural part of the economy. And my suspicion is that that's going to happen. What's natural gas doing? Right? Like if you look at just our whatever, wheat futures, down. It's interesting, though. You see the same things going on, right? Fast move up, fast move down. Here's our descending triangle type pattern, right? We got the buyers that hung out down here, but we got the lower highs. See, this high is lower than this one. This high is lower than this one. This high is lower than this one. Just get on Ozempic. Well, the trouble is, it's like my doctor said you can't really get it unless you're it's hard to get unless you're diabetic, and I'm not diabetic, fortunately. But yeah, I don't know. I mean, I think I gotta. If I could get it, I would. I know someone who got it, and like they're not diabetic, but they said that on the receipt on the bill it said it was like a golf shop down in Nashville. I think it was either Nashville or Memphis. I forget which one. But yeah, I guess maybe some golf shop is like selling it out the back door. You know, it's like in New York City, going to the bodegas to, they used to sell weed and stuff. All right. Anyway, so we see the same thing. Support becomes resistance. We got our fast move up. Support here becomes resistance here. So this is the wheat market. How is it possible that we're seeing these same things that we saw in? Is there a water trade? Maybe some utilities that trade water, or would be a water play.
Sean, he said down around 418 on SPY.
Oh yeah. All right. Yeah. So we got this. So support becomes resistance. Support becomes resistance, and we see the same patterns in any security, whether it's commodities. Here we were looking at wheat, we were looking at Bitcoin, we were looking at the stocks, and it's because we're looking at the psychology of the people that are trading it. And just like stock traders fail buyer's remorse, wheat traders fail buyer's remorse. They bought here and they're trying to sell to get out over here. Then you get our principles of our fast move up, fast move down. Then you get into a range, and you get the fast move up and the fast move down again. So this is, yeah, I mean, you can see this stuff on any chart. All right, so we looked at SPY. Now let's go look at our tech sector here. So this is still kind of hanging around this important level, I mean. But if Apple doesn't make it above 175, then this is going to come down. All right, let's look at our all-important financial sector. Yeah, more weakness here. Now this here, right, you may look, if you just looked at this in, I guess in isolation would be the right word. All right, well, we're only down 14 cents. That's not a big deal, right? That doesn't sound like much. But if you look at it in the context of what's been going on over the last, 2 or 3 weeks, it's down again. And right now, if it was to open, it would actually be a gap lower from yesterday's close. So we had this gap down yesterday. Well, on what day is today? Tuesday. So on Friday, we closed here. On Monday, we opened here. So that's a little bit of a gap. This just shows really aggressive selling. You can see it up here, right? Gap down, aggressive selling. Looks like we're going to gap again. Now this, to me, I think this could go lower too. I mean,
Bert Bees are down $2 this morning.
What is?
And Bert B is down. The bid is 346. The ask is 347.
Now this is the biggest company in the sector, Berkshire Hathaway. Yeah, I mean that's pretty weak looking too. And this is a really kind of an instructive chart that teaches the principles of what the head and shoulders pattern shows, right? Remember, we got to look at these patterns through the context of supply and demand. Now, why does resistance turn into support? Well, because seller's remorse. Seller's remorse is common in a market that's moving higher. All right. Resistance becomes support. People sell and they go to buy their shares back. People sell and they go to buy their shares back. Sell, regret it doing so when the price goes higher and they go to buy back. Now, even here, the resistance back here became support here. So now what do you notice here? The first thing you can see, well, don't want to sound overly dramatic, but a characteristic of a market top is when this process of resistance turning into support comes to an end, right? So what should have been resistance, so what should have been support around 364 at this clearly defined resistance level did not become support. So that shows us that this dynamic of resistance converting into support has come to an end. And that's a characteristic of a market top. And as we can see, it sure enough played out perfectly, right? We didn't get support, and now we've had a big drop since then. And this morning, again, it doesn't look like a very big move. It's only 30 basis points, but it's below, it's going to be another gap opening on the downside. So here, I would guess their next stop before where I would be looking for a bounce is down around 340, 341. So we got some like $6 or $7 more. Water rights.
Welcome to the stream. We haven't heard from you yet. Nice to meet you.
Be well. Oh, I like that handle. BWEL. Maybe I'm looking at the wrong thing here. Is this it? Boswell. I don't know if this is it or not. Well, you know what? We couldn't really trade this anyway because look at this. It only averages 94 shares a day. Wow, that's like nothing.
Wow.
Yeah, so this is just something that you should pay attention to. If you ever see like a new stock or something that looks kind of tempting, you should always check out what the average volume is. Because if you got something like this where the average volume is 94 shares a day, that's just not liquid enough to actually trade. So, you would just have to pass on this one. Because think about it. If you just say you bought 1,000 shares, which would be a lot of money, that's $650,000. Just say hypothetically you bought 1,000 shares. If you ever went to sell it, you might have to knock this thing down 10 points.
Yeah, easy.
So what we used to call these things the roach motels. Like you can get in, but you can't get out. All right, so let's see what been watching the bank industry. Now let's see what's going on here. And here we go again, right? Resistance turns into support. If you really kind of let these markets tell you what to do. I mean, I know it's not an easy thing, but that's what the best traders do. They don't come up with these, ridiculous ideas of like, whatever. I like to make fun of GAN theory because it's so stupid. Or Elliott wave. That's another dumb one. Or they don't want people tell them what to do, right? You got to kind of just figure it out for your own personality. I mean, think about anything, right? Think about you want to learn how to play golf, right? You don't hire the golf pro to go play for you. You hire the golf pro to teach you how to play, to teach you how to develop a swing or a style that fits your personality. If you take a martial art, you're not hiring the sensei to go beat someone up. You're hiring him to teach you how to beat people up. Only of course if they
need it.
If they start it, because obviously we're always into self-defense. But yeah, it's like people want to come on and like they want to get their like trade idea of the day, and that's just kind of dumb because the best traders lose money. They just don't lose a lot of money. They get out before things get too bad. Right? I mean, look, Babe Ruth struck out more than any other baseball player, right? So if Babe Ruth strikes out, if he hits 2 home runs and then he strikes out, are you going to say, oh, he doesn't know what he's doing, I'm not going to listen to his, baseball suggestions anymore? Like we saw that Steve Cohen said, and that his best traders make money on 2/3 of the time. So that means 1/3 of the time they're either breaking even or taking a small loss. I think a retail trader could have a better win ratio than that because they're trading huge sums of money, hundreds of millions of dollars. So, all All right, Brandy. I'll see you later. So they have liquidity constraints that a retail trader isn't going to have to worry about. So yeah, so this looks kind of weak here. This looks like it could go another couple points. All right, so let's just see what's on the headlines. Let's see. This whole Ukraine thing is really just kind of getting out of hand here.
Yeah, it's I was watching a video yesterday where they're making the women fight now. And you know, it's Mark, they haven't moved an inch.
It's getting like it's like World War One.
It's exactly, and there's no sense in doing this anymore. It needs to be a peaceful resolution right now.
Yeah, and like, you know, our country doesn't have all this money. We're just printing money, and that's inflationary. And that's why we're seeing all these different signs of inflation. And, you know, like, I mean, I'm sorry, I don't want to sound like a fool or an unsympathetic person, but I really don't care if Russia runs Ukraine or not.
I don't either.
I mean, I know. I don't care if Saddam Hussein runs Iraq. I don't walk to work or I don't go on walks and, you know, or wake up at 2 a.m. thinking, oh my God, Ukraine is controlling Russia. These two countries have been fighting for centuries. In World War II, there was the thing, I believe it was called the Holodomor, where Stalin tried to starve the Ukrainians, like 3 million people or something like that, starved to death. But it's like, what are we going to do? Just give them money forever? You know, it's like, if it's really just a stalemate. So,
well, I think we're not being told the truth. I don't think you can trust what comes out of the mainstream media anymore. And the research that I've done, they're not doing anything. We're just sending money in there. And if you watch, every other week, another minister of Zelensky's is being kicked out for corruption. So if there's that much money being stolen, why can't we audit this money going to this war? Why is that such a big, heinous thing for the Democrats to say, let's audit this and find out where the money's going? They just don't care. And it's sad, man.
You got to just wonder, I mean, if it's really because of all this Burisma stuff, you know, they're holding it over them. Hey, give us more money, or guess what? We're leaking all the files. I mean, you would hate to think that, but I want to put it past them.
But would it even matter at this point? I mean, there's so much evidence of their corruption that it doesn't.
Dude, how about this? How come they take a mugshot of Donald Trump if they don't take one of Hunter Biden?
Of course.
You take mugshots, as I'm sure you know, being a bail bondsman, in case someone takes off, and you got to look for them. Donald Trump is probably the most famous person in the world. Where's he going to go without people noticing him?
Mark, the fact that the state of New York is trying to devalue this man's living and devalue his properties, you know as well as I do, your property is worth whatever the hell somebody wants to pay for it, not what some government official says it's worth.
In the real estate world, that happens all the time. Everyone does it. And here's the thing. There were no damages. No banks came out and say, hey, we got defrauded. No one didn't get paid back. Like, in order to have a crime, you should have to have a victim, right? I mean,
absolutely.
Or am I missing something there?
No, you can't have a victimless crime. And you know, the other part of this too is they're opening up a Pandora's box, because they have determined that this man has to be destroyed, not stopped, destroyed, right? So now every billionaire, whether you're lefty, a righty, or in the middle, now what's to say that they can't come take everything you've got because your valuation is too high? I mean, this is ignorant shit, and it's really going to kill our world.
Yeah, it's some pretty smart people out there
that are running it, but they're the.
Well, maybe someone can go pull the fire alarm, you know, during the trial.
But it doesn't happen. That doesn't happen for their shenanigans. It's amazing to watch. And then McCarthy is just an absolute waste of space. That man agreed to give single line budget items, and the only way that you can fix your budget at your house is if you go line by line and you determine what needs to be cut out and you cut it out. And if we're not going to do that, and we're going to keep passing continuing resolutions like we have since '96, when they balanced the budget and then they had a surplus, they've pissed the surplus away and they've bankrupted our country. And now they're just going to keep doing it, and they have to stop the spending, man, or we're done. Sorry about Mateo.
Look at this. They got the wrong symbol for Eli Lilly. It should just be LLY.
Yeah.
unless I'm missing something there.
Hey guys, smash the like, subscribe. Sorry about my tirade. Yeah, well, then maybe it was a good tirade. 807 billion on interest alone.
Yeah, it's just so, I don't know. Well, dude, there is an expression, or there was an expression, like back in, I don't know if it was 100 years ago or 80 years ago. It was called rich as an Argentinian, right? Because in Argentina, things were so good. They had oil and they had all kinds of minerals, and the country was really booming. And guess what happened? After a long term of prosperity, let me see if that comes up. After a long term of prosperity, guess what? The country seemed to get a lot like we are here now. Just people became entitled,
Lazy.
rich. Just like now, you would say they're like someone's rich as a sheik, rich
Yeah.
as an Argentine, rich as like an Argentine. See, rich as an Argentine. So look at this. So you know what? In 50 or 100 years, there's going to be articles like this about, United States unprecedented economic boom to bust history. Rich
Yep.
as an Argentine was once a common phrase because it was one of the richest countries in the world. So today it's got bankrupt, it's got staggering debt. And you know what? I just wonder what that is. Yeah, I mean, so people just become entitled. Look at it. Look at us now. Look how entitled we are now. It's like all right. So you go pick some dumbass major to go major in at school, and you can't afford to pay your loans off. So it's like, oh well, guess what? The government owes you. You have the right to go to school. It's like, no, you don't. It's a privilege.
But you know what nobody's talking about, Mark, is that when you go get those student loans, they give you 7,500 when you only need 2,500. So why don't you give the 5,000 back, or you can party with it? Then you have debt for the rest of your life on $5,000 that you partied on. They do that to predatory loans because the kids don't understand it. But then that goes back to the kids not being taught financial literacy.
Well, you
in
know what, dude? If
schools.
you can't understand the loan, you shouldn't be in college.
Well, I
Like,
agree. I completely agree.
like my niece's partner studied contemporary dance. I mean, what the hell are you going to do with a contemporary dance major? I don't even know what contemporary dance is. I know what ballet is. I know what breakdancing is. Like, what the
Right.
hell is contemporary dance? I don't even get it.
Well, it would be a dance that's not like any one of those others. It's
So
modern.
now if she can't pay off her loans, like we're going to have to, because she chose a dumb major.
Yeah.
Here's an idea: get a major in like accounting, or be a nurse. Something's. But it's already happening because look at some of these cities, man. Look at I mean, I used to take the train out to Baltimore, and my daughter just went back to college down there, and she took Amtrak, and she even said, she's like, Dad, she's like, some of the places in Philadelphia and Baltimore, because the train runs right through South Philly.
Oh yeah.
Through Baltimore, and it's like, dude, you don't even think you're in the country. I mean, it's like scary. The slums are just like in Baltimore. You just see these rows and rows of these empty. I don't know what you call them. Those row houses, I guess.
They're row houses. Yeah.
I remember seeing like a dog that you could see all its ribs. It was like a star. It reminded me of like when I in all seriousness, when I was like, I think maybe like 15 years old, I dated a girl and I went with her family on a vacation to Mexico. And I remember going outside of Mexico City, you could just see these like endless, homeless camps of people living in cardboard boxes and just like as far as the eye could see. And I just remember seeing like these like starving dogs. So that's what it made me think about. But anyway, fortunately, we'll probably be gone before it gets too bad, but you never know.
I don't know, Mark. I mean, listen, I graduated from high school not too long ago in 1990, and I didn't think this country was racist. I didn't think that we were on the verge of World War III. I honestly didn't think that I thought we were actually on the verge of world peace in the 90s. And now here we are. It's just an amazing change of things.
This guy looks like the guy in what's his name in from the spaghetti westerns.
Oh yeah.
Well, Lee Van Cleef. That's what it looks like. Yeah, well, you know what? I think that Obama set race relations back because, yeah, I mean, when I was in high school, we had black friends, and it's like we didn't even talk about it. I mean, you know, it's like, you know what? Before we close up here, I got one more thing to say. Look at the movie Airplane. All right, like one of the funniest movies ever made. I guess it was the late '70s. Every single thing that's in there now would be like
Oh yeah.
incorrect, like today. Like, remember, like when there's the two black guys, they speak jive,
Yeah, and
and
the white
the
lady comes up
stewardess
and
can't
starts talking
communicate with
jive
them,
with
and
them.
the nun comes up and she's like, "Stewardess, I speak jive," and she's like, "Yo, so what it is, blood?" You know, she's very stuck like that. But it was funny. It's like, you
It
know,
was
people weren't
hilarious.
offended by it back then. Now it's like, oh my god, it's so offensive. You
Well,
know?
that's because we wrapped everybody in bubble wrap, and we don't allow people to develop a thick skin in life anymore. And you know
All
what?
right,
Part of
everyone,
it
I'm
is,
going to get going, but I will be back. We'll be back tomorrow morning, and yeah, just keep an eye on that Apple. See if it breaks that 175 level. If it stays below it, we're probably the path of least resistance is to the downside. And if interest rates keep going higher, you could look for some short ideas in the utility stocks.
have a great day, everybody.
All right, we'll see you.